What is happening? All right. Screener.nextbigtrade.com, guys. This one comes straight out of there. DDD, New York Stock Exchange, and that is 3D Systems Corp. Guys, it's too easy, man. Honestly, it's my life's so much easier, man. With stageanalysis.net, with nextbigtrade.com, and just choosing and just having tickers to look at them. They're already like all prepped up. They're already Stan Weinstein ready, and you just look at them, and it's just great, guys. After that, everybody should be able to leverage that and start off on the good good foot. The more the charts you look at, the less you're going to feel that you have to take a position in a less than optimal chart setup. Choose the best of the best. And those guys really help get you get those stickers under your teeth there, instead of you not wasting time, but it filters out a lot of the noise. So here we are, DDD, monthly candle chart. Whoa. Okay, zoom too much. Put that in the middle, see where we're at with that. Okay, this is what it looks like. I think we have some monthly defined resistance here at the 2050. We have some monthly defined support at the 8 level. Patterns within patterns. Remember, these are monthly candles. This is like could be a bottom forming. And when we zoom in on the weekly chart to do the Stan Weinstein stage analysis, we're going to see this. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months, guys. Yay! I could count. Use your imagination. So you imagine that this is nice stage 1, starting to a stage 2. And in a few months, maybe if we get in, we'll go confirm on the weekly chart. Price action could go up, hit this resistance, pull back, and then go up, and then maybe go out. It's never in a straight line. You got to get that in your head, because people think you get in a stock and it's to the moon and right away. And right away, if you don't take that out of your mindset and you don't expect the pullbacks, that's just emotional landmines all over the place, just waiting for you, and you're going to jump on them. So expect they're going to be pullbacks, going to be resistance at key levels. Go back to your chart, see where the monthly defined resistance was. It's pulling back here. Is it on low volume? Check. Okay, no worries, etc. Prep yourself. Practice. Look at the charts. Choosing the tickers is just a small part of it. It's the least important part. The rest is the risk management. When you set in your trades parameters, when you buy, sell, stop. Your money management. Make sure you live to fight another day. Don't never lose more than 1% of your NAV on any given trade. And the emotion management. Expecting the landmines, the emotional landmines. What happens once you're in the trade? Greed, fear, all those things that you could step on there. Get some techniques under your belt. All right, that's enough. So right now we could be breaking out right there in the monthly candle chart. My target would be right here. Right here. I'll leave that there. Alerts are free, man. I have tons of alerts. And this goes back to this previous support, resistance, broken out, turned support, and then after that, broken down back under. So we might have, this could still be valid resistance right here. You're right under. So that's a nice target. Even on the monthly candle chart, guys, my classic trade framework, I would wait for this candle here to close, wherever it closes, enter here. I put my sell stop under the wick of the candle. That's my risk. And here's my reward from the top of here all the way there. So that would be a pretty sweet setup there if the price could close around what's that? Around 1420, 1450 there. That's a definite go, 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 go. All right. Let's scoot on over 5-year weekly stage analysis. Let's see what's happening here. Look at that. Stage 2, stage 3, stage 4. Perfect stage 4, guys. Look at that. Under the red cloud, 30-week moving average. Never once went through. This is clean, 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 clean. And after that, cross the 30-week moving average. That means it's a slowdown. If you would have sold here, oh, I hate doing that. If you would have sold right here around as this cross, we're pretty close to the bottom of the move, guys. Okay, let's zoom in. Let's get down dirty. I always look. Okay, a lot of remove ultra nines. I look at these candles here. Look at the volume candles, the ones that stick out, that have twice the average of the previous 4 or 5 weeks. And then you could almost guess that there was a breakout. Right there. See? Candle close above that important resistance. For that, the bottoming, breakout. Not a Stan Weinstein breakout right there. 30-week average still going downwards. But I've noticed, like on my classic chart trading framework, there's patterns within patterns that make bigger patterns. And on Stan Weinstein, same thing. A breakout is going to start scooting over the moving average, making it start to flatten out or angle upwards. Another breakout. It's like a turbo boost. Breaks out. Okay, I'm out. Pull back within 1 to 3 months. And after that, oh. And that's the thing, when you have these early breakouts, just don't go in there right away if the 30-week average is going down like that. Because the momentum's still going down. So like the market's saying, I'm going to go up. But then before you go up, you're at the bottom here, you have to flatten, and then you have to go up. You still don't have the trend behind you. And that has these moments here. And if you would have set your sell stop too close, the trader's way, you would have got triggered out. If you put your sell stop the investor's way, you would have been okay. But you're still spending time in a stock that might still not explode. Horizontal breakout line above a rising 30-week moving average with the volume. Check, check, check. Here's the next time that it happened. Right here. What's that candle? Right here. But didn't break out above the horizontal breakout line. But it's giving signs. And then pull back. Every time, see the volume was contracting on those pullbacks. Same thing here. See that red candle? Goes out, pull back. And now, let's say this would breakout A, breakout B, or not breakout, but high volume push. And here's the one we're looking at. The volume. There's one more day. I'm going to post this. I'm doing this Thursday night. Post it Friday morning. It's already had the pretty good volume. Twice the average of the previous 2 weeks. 3-4 weeks. Yeah, that's going to skew a little bit the average. These two big candles. So hopefully maybe we could close up here. That'd be pretty clean for a breakout. But what do we do with that, guys? What do we do with that? The thing is, let me remove that. This one, remove this one. Pat, you're so slow tonight. What? Okay. Put that arrow for the form. 3 moving average trying to go up. It's just the only thing is this overhead, this Ichimoku cloud defined resistance. And that you could probably hit here, probably going to slow down and maybe come and retest that breakout line right here. And that's why it's a good move, maybe not to enter here because of the cloud, but use that cloud as a possible bounce down and come back here, and you're going to enter here on the pullback. The advantage is you're going to save a few months. So if it takes 1 to 3 months for it to bounce back here on contracting volume, then that's just time less you spent in the trade. If it and after that you get to see how it rolls out before taking a chance here and having to drive through this resistance right here. And just waiting, finding that excuse, saying, I'll play the pullback. And if it doesn't pull back, then what could happen? Use your imagination, guys. It could just drive through here, maybe play here, and then continue here. And then what's going to happen? You're going to have another continuation breakout move here. And you're going to look, do I have my volume? Twice the average of the previous 4 or 5 weeks. Yes. 3-week moving average is going to be going really up by that stage. And then it's all clear ahead. So imagine that. This could be well happening here. We had that breakout pattern here, the second one here. This could be the third one. Off to the moon. All right. Led the 30-week moving average. Turn. You're still at the beginning of it. Once it starts turning, it's really in your favor, guys. It's going to help you. The pullbacks are going to be corrections and not reversals. And that's what you want. Look at that. You see how that time frame, all those lines, it's just like a few candles here. I just want to look if there was monthly defined resistance here. No, not here. So once we're out of the cloud, even on the monthly, we have some time to move up there before we hit a congestion around the 18 area. And eventually around the 20 area. It's all good, guys. So we have the monthly defined breakout happening right now. As long as we close above 1345, 1350, we're set. And then it's just a question of deciding if you want to wait or not for the pullback or for the move above the Ichimoku cloud defined resistance. Because remember, Stan did not have the cloud. He just said in his book, watch out for close overhead resistance. Well, how do you define close? 26 periods before 30. That's where the Ichimoku cloud comes in. Or else you'd say, that's to the left of the chart. There's no resistance. Or you can even go like this. Oh, hey, look, no more resistance to the moon. So you see how the chart, it could skew a lot of things. But it's still looking good, guys. Constructive. And keep an eye on it. I'm going to keep an eye on it for the next few weeks. See how this morphs out. And look, by the end of the month, we'll have that monthly candle close. And we'll see how the weekly, what happened with the weekly. Cool, DDD. You're starting to go in stage 2. Ciao. Bye.